Hi, everyone. Welcome to the reverse mortgage webinar. My name's Matt Clark from Key Choice Lending. Appreciate our key partners and existing clients who have signed up. New to business people, welcome, and thanks to Isa and Win for sticking around to assist. So we're talking today about reverse mortgages. Disclaimer, this is general advice. We've taken some information on how generally reverse mortgages work. You need specific legal and financial advice if you're going to act on the information provided here today. The agenda, there it is. I won't run you through it all, but it's essentially an overview, how they work, what you need to know before you take that step, how they work. So who are we? We won Mortgage Broker of the Year for Best Boutique Non-Franchise Mortgage Broker of the Year in 2024, and we're a finalist again this year. We've been around since 2001. Hopefully, we do a great job. To check on our history, go on to Google, see our reviews. We got a lovely reference from existing client. We spoke to her yesterday, just check in, see how she's going, and she sent this lovely message to us. Reverse mortgage, large property, needed some work, didn't have the funds to do it or pay for a rate, didn't want to sell, and we're able to assist her with a reverse mortgage. It's made a huge difference to her, and she's got great quality of life, being where she wants to be around her animals on her property. So this our team. They're invaluable. Isa is a qualified mortgage broker. She's online now. Sally McClinsky has been in the industry 32 years. There's not much those two don't know. Win is relatively new to the business over the last few years and is qualified accountant, doing some excellent things, learning the trade. Ron Lacoste, over 30 years in financial planning and mortgage broking. So let's get into it. That's about us. Let's talk about the product and whether it's suitable for you. So reverse mortgages actually been around since the early 90s. So back when Tom Cruise and Nicole Kidman were married and before he's jumping up and down on the couch. So reverse mortgage is for 55 and overs. It's essentially an equity release from home and there's no repayments required. So why are they becoming more popular? Well, a key issue for the Australian population as a whole is the fact that the worker to retiree ratio has dropped from 17 to 1 in 95 down to just 3.5 to 1 today. It means there's less workers generating less tax dollars to support the economy. So we have an aging population. 7.5 million Australians will be retired by 2030 and 17 million by 2049. So you can see that's tipping to the point where wondering how we're going to fund retirees' living standards and on those living standards. So Australians are the wealthiest per capita at $495,000 a person, but it's tied up in property. On the flip side of that, 35% of retirees in Australia live below the poverty line. So everyone's thinking, well, Australia's a wealthy country. That's true. Come retirement, housing is a great asset, but the wealth is stuck in the house. They can't access it to live today. So reverse mortgages highly regulated. So they're non-recourse loans, which means you can never owe more than your home's value. You're not going to get kicked out. There's no monthly repayments required at all. You can make monthly repayments, but they're not expected. Lifetime occupancy if you're on the title and on the loan. So that's something you can talk to us about individually if there's you're a couple and only one of you is on the loan and title for protection of the other person staying in the property. That's something you might need to look at. And consumer protections are high. We're highly regulated as a finance industry, but also specifically the reverse mortgages closely monitored. So how much can you borrow? Essentially, at 55 years of age, you can borrow 15% of the value of the property, and it increases 1% a year. So at 60, you're at 20%, 65, 25%, 66, 26%. So it creeps up like that. This is a general guideline across the handful of lenders who do reverse mortgages. Equity position. So what we've illustrated here is if you had a home worth $1 million, you can see this line here, $1 million. So starting here in 2025, and you took $50,000 out as a reverse mortgage, and then you were drawing down 30,000 a year from year two. So what does that mean? Well, if we say that interest rate's 8.5%, you take out your 50,000, and then every year, starting at year two, you take $30,000 out and you don't make a repayment. That means you owe this figure, $1,618,300 in 2045. So that's no repayments, capitalizing interest. What's the value of your home doing? Well, we don't know, but if we guess a 5% return, the house starting at $1 million will be worth $2.653 million. So you can see the line of the debt and the capital growth of the property are moving fairly similar. So equity, that's this line here. So you initially had 950,000 in equity because the house was worth $1 million, you drew 50,000 out. But as the debt goes up and if the housing goes up, your equity position essentially remains the same. Of course, $1 million won't buy you in 2045 what it can buy you today because of inflation, but it's just a guide for you to understand, well, if you stay in your home longer and property prices increase in value, that can offset some of the um, challenge with not making repayments and capitalizing interest. Of course, there's no guarantees properties will go up in value. And you can play around with those numbers on what you think is reasonable expectation. So, three ways of using a reverse mortgage. You can get a lump sum out, just a once off lump sum. You can get regular income. So, you'd say, well, instead of getting $200,000, I want to get $5,000 a month for the next, what's that, 40 months. So as a regular income, or you can have the option of a reserve. So you can just have it sitting there. You can get the facility set up. Don't draw anything down. Don't pay interest until you draw it, and then as you need it, if you want to go on a holiday or buy a car, etc., you can draw down. So lump sum versus structured drawdown. So this is an interesting way to look at things. Of course, the whole purpose of a reverse mortgage is for you to be able to do things you can't do. So you don't want to be so worried about the dollars and cents. But if you can manage things instead of going a lump sum, let's say you wanted to spend 150,000 over the next couple of years, you might want to buy a car now and then go on holidays and so forth. So if you just took $150,000 out as a lump sum and the interest was calculated on that from day one, well, then in 10 years' time, you're going to have a loan balance of 338,184. So you've grabbed 150,000 out, it's capitalized in interest, and that's what your loan balance would be. If you had the option to take 150,000, but you only needed 50,000 now, and you just wanted 10,000 a month, sorry, 10,000 a year for the next 10 years, so you wanted to just be able to have some extra funds to go on a holiday, maybe you've got some other superannuation or alike, but you wanted to do some work to the house now and just have a top up cash flow, but it's the same amount of money. It's 150,000 over 10 years. So the option A, we said it was going to be 338,000, but option B, if you just took 50,000 and then took 10,000 a year for 10 years, your loan balance is almost 100,000 less because you're only drawing it on an as needs basis. So that example is based on 8.5%, not making any repayments. And it's just to illustrate the longer you leave the money in the loan, the better, because you don't pay interest until you actually draw it out. So, pros of a reverse mortgage. The big one for our clients has been they can stay in their home, their communities in the area, they're comfortable, they don't want to leave their home. There's no mandatory requirements to make repayments. You can have flexible drawdowns, and that's what we're here for, to help you understand that you can get a lump sum, you can get partial lump sum, partial ongoing. You can mix and match how you need it. No negative equity guarantee. That means you can't owe more than what your home is worth. Funds can be used for a wide range of purposes, whether it's you need some care, whether you need to do renovations, car, holiday, you want to gift some to your children to help them get in a home. There's a whole range of uses for a reverse mortgage. Getting a mortgage does not affect your home ownership. So it doesn't change your names on the title or anything like that. It's just a mortgage. So the lender, whoever of the reverse mortgages we advise you to go with, they have a mortgage on the title. It works the same way as the standard mortgage in that regard. They place security on the title. Important consideration. So interest compounds. It just capitalizes where it and unless you make repayments, which you're not obliged to do, the level of debt will increase. That may reduce your equity over time. So if you're not making repayments and you're drawing money against the value of your property, and if property prices don't go up or they come back, you're going to have less equity. In an ideal world, property prices will keep going up, and that would help mitigate some of the expense of using the funds. But there's no guarantees. There's higher setup costs and legal fees because it's a highly regulated loan type and they're smaller loan amounts, so there's higher costs involved. Um, so it may limit some options for you in the future if you have less equity. So they're important considerations. Gone through what you can use the funds for: home renovations, modifications, in home care, supporting loved ones, any RADs, or if you're moving into aged care facilities and need a bond, um, bridging finance if you're going to downsize, like you're just going from a larger property, smaller property, you need some funds for the deposit on the smaller property until your property sells, alike travel and lifestyle needs. So I know this is a lot. I know I am going through it rather quickly because there's so much to get through, but please rest assured at the end of this, you'll have the opportunity to book in for a meeting and we can talk one-on-one about um, and your personalised circumstances and what you need. So it's an opportunity for you to get things in order if they're not already. So who do you need? Well, mortgage broker, that's us. You need a start to finish for you to obtain the loan. These loans aren't funded through major banks, so it's you need to deal with us. A solicitor you will need because the loan offer needs to be explained to you by a solicitor, and that the reason for that is they need to understand that you are cognizant and understand what you're getting yourself in for and are clear on the terms and the conditions. It's also a good idea to have a solicitor for to get your wills in order and to make sure that if you need any advice, it's cleared up at this time. So it's a good opportunity, as I say, to get things cleared. If you have a number of investments, if you have a self-managed super fund, if you're concerned about the impact on pensions or alike, a financial planner's a great assistance, and you might want them to help explain things when you start to get into moving from a home to an aged care facility. It starts to get complicated, and especially if you have a number of assets, it may be worth engaging a financial planner or advisor. And with all of these, the team that you need. We've got people that we've dealt with for many, many years. If you haven't got someone, we can recommend someone in your area, so you can reach out to us for that. You may need Centrelink guidance if you're receiving pensions, and how this will impact your pensions. You definitely need to speak to your family about what you're doing, so everyone's clear. And oftentimes there's anxiety if you're older and there's children involved. They just want to make sure that you're doing the right thing for yourself. And yeah, that's where they might want to understand, because if you're not fully across what the product is, you might think, oh, that's a bad thing, or why is it a slightly higher interest rate, or why. But it's important that they get context, and we can meet with you and the family as well, if need be, just to give them clarity on where this product sits in the market. Um, if you need to sell your property at any stage, we've got a sister company, 80 Metrics, who can do what's called vendor advocacy. So that means we can act on your behalf, interview real estate agents, negotiate their fee, um, and provide some guidance on who we think will be the best fit, what they expect to get for your property, how they expect to market it. We can also get it's called a return on investment document done. So that means we can assess uh, what an estimate of the property value now. What if you spent X amount of dollars on a renovation? What can you expect to achieve in a sale price? So that return on investment may be worth doing, may not. So what will it cost? So it's higher cost. So this is a general guide. So lender establishment fees anywhere they have special, so they're nil up to $950. Our fee as a mortgage broker is $2,200, including GST. Valuation may be zero. It can again be up to $950. Legal advice is generally between $400 and $800, and discharge fees approximately $250. So you can see they're higher fees than your standard mortgage. Um, there's less players in the reverse mortgage game. There's only a handful. You got extra costs because you need to get a solicitor. The valuation can fluctuate depending on the type of property you have. Lender fee. So where we come into it, we can break down what's available out there. We're required by law to act in your best interest. So we will say, of the reverse mortgage lenders, here's who we recommend based on your property type, location, interest rates, costs, all that sort of thing. This is who we recommend. These are the others. Would you like to go with our advice, or we can act on your instruction to go with one of the other lenders? Uh, Loans do get declined. We are fairly militant with how we go about assessing the loans before they get put up to the lender. So hopefully that is never an issue for you. But the reasons are essentially it's a loan against the home. Uh, and that home's got to be in your name, so it can't be in a trust or company structure. The home has to be livable, because they don't want to lend purely against this property and it's in a state of disrepair. No one's going to buy it because there's maybe no kitchen or weatherboard's missing, or there's no, like, the place has been gutted internally. So it needs to be something that can be sold readily when you're ready to move out. So just it doesn't have to be a pristine condition, but it needs to be a home unit or house that is in reasonable condition. They're not in the business of renovating properties or anything. They just want to purely lend the money against the asset. So the youngest person on the application needs to be 55 years or older. So I'm sorry if you've got a young bride or husband. And if they're on the title, it goes on the youngest person, so they need to be 55 year or older. Bank won't lend against anything that's a retirement village or leasehold because they can't secure the loan against anything. You've just got a part share. But if you own a home, or it doesn't have to be a home, it can be investment property. But if it's apartment, townhouse, unit, or home, it can be used as security. If there's concerns over your mental capacity, I've got many concerns over my mental capacity, but essentially you need to understand what you're getting yourself in for. If there's no clear benefit, if you have $1 million sitting in the bank and you want to get a loan against your home and there's no reason for it, well, they won't. There's no discernible benefit, so they wouldn't do it. Gambling's a big one. So if you're applying for a loan and they require your transactional accounts, and if they see all your money going out to a gambling establishment, they will not fund the loan. They won't approve that loan. So we had one recently that did go, and we got the statements, and there was withdrawals from the gaming venue, but we went through them in more detail and we realized the person had reasonable savings in another account. The amounts weren't huge. And we looked where they lived. They were in an area where the closest way to access funds was to go to that pub and withdraw money. So it was what they did. Instead of driving further to a bank, they went to that pub and got their spending money out. So every case is assessed holistically on your position. So this is the big one too, elder abuse and why that triggers a loan decline. So if there's pressure from family carers, other one, etc., for money, then the loan could be declined. Hence why you're required to get a solicitor involved as well. And you must have full mental capacity or a power of attorney appointed. The process, so for you, if you wanted to proceed, there's a discovery call. That just means we talk, see what you're looking at doing, where your property's located, can it work, and various projections on the loan balance over time. When you proceed, uh, the lender that you go with, we organise a valuer to go out through that lender. So we can't instruct the lender. We can't instruct the valuer. The lender does. So when you submit your application, you may have a good idea what you think your property's worth, and you can provide that evidence. But those valuers, they're professional. They've got recent sales in the area. They will go on similar property, similar location, similar um, uh, in the last 3 months, etc. So they're going to come up with that figure, and that figure will be, if it's $1 million and you're 55, you can borrow 150,000. If you're 60, you can borrow 200,000. So your loan approval is based on the value of the property and your age. You don't have to borrow that much. You can borrow less, but the variation process, if you come to get more down the track, is expensive because of all those costs have to be bought again. You need to get the new application done, new valuation done, They need to be the new document sent to solicitor. So it's best to have the funds available, even if you don't use it, and set it in the mortgage. Legal advice is mandatory. Look, and future sale mention 80 metrics for vendor or advocacy, but it's not overnight. I say to people, allow 8 weeks from start to finish, because we meet, we talk about which way you want to go. I give you advice, we get the approval, the valuer goes out and meets with you to get access to the property. They go through, send it back to the bank. Bank signs off, solicitor sends documents out, you take them to your solicitor, sign, send them back, and a settlement's organised. If you've got an existing mortgage, that's all right, that can be paid out. And then a settlement date's created, and you get the information on how to access your funds. So if you've got your phones, you can, and you want to book a meeting, you can go on to that QR code, just hold the camera up and book in. You can go to our website. We've got live chat function or book a meeting straight there. There's the link for book a meeting. You can email us or call us, and we are missing an extra O off the end of that phone number. So excuse that. I might just go back there. Uh, or you can click a question in the live chat. So, what are the alternatives if you don't get a reverse mortgage and you need funds? So, there's Centrelinks have an equity access scheme where they can make additional repayments with no loss of um, ownership, but that's something you need to, we can't advise on that. You can contact Centrelink. The problem with that is it's small amounts of money. You can downsize, but again, you may need a reverse mortgage to help you with deposits, etc. But speak to us about that. You can rent out part of your home, or you might be able to get family assistance. So some question and answers. So will you still own your home? Yes. They don't take ownership. They just hold a mortgage. When I say they, I mean the lender. What if you live longer than expected? Good problem to have, like this young lady. You can stay in your home as long as you like, as long as you comply with the loan terms. That is, don't knock down the house or anything, but you're not going to get removed from your property. Can you repay early? Yes, you win Tats Lotto, someone wants to gift you a lot of money and you want to pay it off. Yep, there's no break fees unless you've got a fixed rate. And I don't know any reverse mortgage lenders who are currently offering a fixed rate. They're generally variable, and that's for the reason that it's flexible. You can take money out, put money in, etc. Can you use the money to help your family? Yes, reverse mortgage funds, as long as you're not gambling it, you can pretty much do what you like with it. Home renovation, clearing debt, supporting loved ones, bridging, travel, lifestyle, gifts. Does it affect your pension? Now, my area of expertise, we've got planners to assist you with that, but essentially, it could if you take the money out and invest it, or have huge lump sum sitting, accruing interest. But if your asset position essentially stays the same or goes down, so it's unlikely to affect your pension in most cases, but you need to get the specific advice. Yes, question and answer. So, what happens when the final tenant moves out or passes away? Everyone seems to be worried about it. I think my kids can deal with it because I'll be not here and they can sort it out. So, what happens is your solicitor, and this is why it's good to have your wills up to date. You can, they can handle probate. So, it essentially means they get a copy of your will, and you're required to provide a certified copy of your estate, not you, because you may not be here, is required to provide a copy of death certificate and will. And then the solicitor and the executive of the will have 12 months to sell your home. So there's plenty of time. Um, you can move out. This on the case of passing away. So quick checklist. What do you need to do? Well, essentially, the first step is if you're interested in this, give us a call. We can work through the calculators and what it means. You can also go to our website, keychoicelending.com.au, and look up the reverse mortgage calculator. So go to our website, go to calculators, and then look down and there's a reverse mortgage. Click on that and you can play around with the numbers, what you think property will go up or down by, and what the interest rate will be and how much you want to borrow, and you'll get a good understanding of the various permutations of what you can do. So the calculator's the second thing. We can help you with that. Then you'll need to get legal and legal advice on the documents. If you proceed, you may even want to get your wills updated. You may want planning advice. You may want Centrelink advice, and you may want family involvement. So I know it seems overwhelming, but it's actually good to get your affairs in order so that you're really clear on where you stand and where you want to get to and what your wishes are. So, summary. Great thing about reverse mortgages, they let you access your home equity without selling. It's really important to a lot of people. You can draw funds as you need them. Interest compounds. But if you gradually draw down instead of lump sum, so you're better off. Uh, Hopefully your home continues to grow in value and you actually protect that equity position. You need a team of people. If you haven't got your team or you've got parts of that team, we can assist you. There are setup costs, so it's more expensive to get in one of these loans, but they are paid from the loan proceeds if you haven't got those funds available. And we try and make it easy from start to finish. We're essentially what you would consider a bank manager in the old days. That's what a broker does these days. Sets it all up. You communicate with the bank for once it's set up and when you want funds in and out, but we set it up as in your best needs. So again, play around with the reverse mortgage calculator. Go to the Money Smart website. That's got a whole raft of information on reverse mortgages, government backed. For your information. Speak to your loved ones. You can click on the QR code, get your camera out, and it'll take you to the book a meeting. Select a time that suits you. We can do face to face with more. Notice these are online meetings, just because our team is all around the world. So we do tend to do Zoom. Thank you. Really appreciate you taking the time. Again, it's a disclaimer. So the information provided here is general in nature. We've taken an understanding of how reverse mortgages work. We haven't gone specifically into locations or property types, etc. But just to get you give you a feel of who you need. It can be all overwhelming, but where do you start? So you start is, well, I'm thinking of doing this. Play around on the calculator, book a meeting. We can have a chat. There's no fee for doing that. We can have that discussion. We can talk about other pieces of the puzzle that you might need. We're here just at the end of the phone.